What's up, everyone? It's Karthik with MoneyVest. So Tesla stock selling off once again quite aggressively, two back-to-back red days, and over the last couple of weeks here, we've seen Tesla once again fall in double digits, down almost 50% from its all-time highs. So if you come over to our market snapshot over here, you'll notice that Tesla is very close to entering a quote-unquote crash. Right now, it's still in a bit of a bear market, as you can see over here, from its all-time highs of well over $414 per share, which was hit back in November of 2021. I just want to make sure that that was indeed month and day as opposed to day and month. Yep, so November 2021, as you can see, that was the all-time high of $414, and it just closed at over $207.67, down almost 50% from its all-time highs in a bear market, very close to a crash as well. We very briefly touched that crash for Tesla. That was a threshold, and we recovered just a little bit, and we're back down to almost under 50%. So there's been over a $674 billion market cap loss for Tesla from that all-time high. And if you take a look at the last few weeks here, especially the last couple days, I mean, we've seen a 6.5% sell-off, and then on Friday, a 4.2% sell-off. And then if you compare this from July 11th, when Tesla was at almost $270, the stock is down over 23% in just the last 3 weeks alone. I mean, 3 weeks, the markets have also seen a pretty brutal sell-off, so it's not just contained in Tesla. I mean, if you take a look at the NASDAQ composite, it is down over 10.2%, so Tesla just a little bit twice as much down as compared to the NASDAQ. So in this video, I'm going to break down everything you need to know about Teslas here. Morgan Stanley upgrade. We had some few comments from Elon Musk. And again, we're going to be doing a full fundamental analysis on this stock, so make sure that you drop a like. And all I'm asking in return from you guys is that you share this video with other Tesla investors. It really helps out the channel, helps us grow, spreads the video out to other people. So I would really appreciate that if you could simply share this video. And also, if you want to enter into a free giveaway, so we're going to be giving away our courses for a few lucky winners. Links can be down below for my Instagram if you want to join and connect with me over there. My handle is going to be CASWRP, and you can enter into a chance of winning this entire 4-course bundle for free. So links going to be down below. Would love to have you on board. So let's start with this, and this is the cost basis breakdown for all Tesla shareholders. This is the cost distribution. And right now what you'll see is that among all investors of Tesla, this number was in fact well over 70% at one point. But because we've seen such an incredible selling pressure over the last 3 weeks, as I mentioned earlier, all these investors that were originally in green are now back in the red zone. And we only have about 29%, so just under 30% of all Tesla investors right now are currently profitable on their shares, and that's going to be this right here, all these shares over here that are still trading below the market price of $207. So the average cost basis right now sits at well over $222, which of course is higher than the market price. Hence, majority of traders are in the red, with a small minority, about just under 30%, a third of investors in the green at the moment. Now, the reason why this is so important for us to track is because it gives us a bit of an idea of where the areas of supply and demand and how that psychology or sentiment might play a role for Tesla stock. That's actually one of the reasons why companies like NIO or companies like PayPal are having a very, very hard time to recover, is because when you take a look at their cost distribution and their breakdown, majority of shareholders are in the red, right? So in other words, this entire section may just be in red for those companies. So if you get some type of a bump or a stock rally, it comes back down, it comes crashing back down. Why? Because anybody who's now moving from being red to green, right? So you're going from being underwater in that stock to back being positive, is going to take that opportunity to get out of that stock because they no longer want to be invested in that company because they've held on to that stock for way too long and it's never really recovered. So that creates a little bit of that selling pressure. As soon as the stock starts to rip, there's selling pressure, there's pressure back to the downside, and it's never able to kind of recover from that cycle. So 29% for Tesla. We're still, of course, yet to breach highs of 300s and 400s in order to kind of, get these investors. But right now, just about a third of investor share currently in the green. Now, there's a lot of technical analysis circulating out there. There's a lot of different types of analysis for Tesla. This is one of them, which is showing us an inverse head and shoulders with a neckline at 271, left shoulder, head, and then a potential right shoulder forming, which could lead to a potential breakout to the upside well in the 370s and 400s. And there's another analysis on Twitter that was posted by Dean8312 speculating big triangle pattern on Tesla, which is again the all-time high from back in November. This right here is B, this right here is D. Again, consistent lower highs and lower lows for Tesla, and these right here being some higher highs and higher lows, and this is the overall sort of triangle pattern for Tesla, which after coiling in could break to the upside is what they're also expecting. So there's a lot of technical analysis going around for Tesla and circulating, but in this video I also wanted to sort of break down some of the analysis for myself. So the first one is going to be over here. And what we have here is Tesla's overall pattern, which is very, very cyclical, right? So since IPO from back in 2011, since the stock price has been public, Tesla in general has had these areas of consolidation for years. We're talking 2 to as many as 6 years of consolidation before making any type of a move. This was back in 2011 all the way through 2013. Tesla didn't really do anything until finally ripping almost 1,000%. This right here was 6 years worth of Tesla stock going sideways. I mean, this is from 2013 all the way to as much as 2019, right? So 6 years of Tesla doing absolutely nothing. And when I say nothing, I mean that it's at the same price as it was 6 years ago. I mean, of course, there's volatility, and in between that consolidation range, Tesla is still going down by over 50%, and it's still rallying over 163%. So certainly there's a lot of momentum. But at the end of the day, like if you come to 2019 compared to where it was back in 2013, 1% increase. So it's really just flat over that 6-year period. And then finally ripping over 2,000, almost 3,000%. This is also the time during the pandemic. This is also the time during the accelerated adoption for electric vehicles, as well as the short squeeze, as well as the inclusion in the S&P 500. So a lot of catalysts took place over here for Tesla, and now we're once again back in that zone. Since 2021, Tesla has not really gone anywhere. In fact, if anything, it's down almost 50%, and that's already 3 years in. So 3 years in, we have not gone anywhere. So that is a lot of consolidation sideways once again. So the idea would be that, okay, once it gets going again, once we get to see a little bit of a breakout, that breakout can break us out over 400 and on a potential rally once again. Now, this right here is going to be another Tesla analysis. So if you come over to this chart, and what we have here is the actual technical analysis based on both short-term and long-term support and resistance levels. So what we have overall is, of course, a lower high and lower low pattern. So boom, 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 right over here, lower highs, lower highs, lower highs for Tesla consistently, and lower lows, lower lows, lower lows, lower lows, a little bit of an overextended low back during the October and December 2022 bear market, traded all the way down to low 100s. But the overall chart is that this right here is the lower high and the lower low pattern for Tesla. So still very much in the context of a downtrend. And at the same time, it's fighting through with a lot of areas of supply and resistance. The first more important one is going to be sitting right over there, and that's in the 270s, right? So this right here is the red rectangle of important area of resistance to watch for Tesla, aligned with some of these levels where we have previously also gotten rejected for Tesla in the past. It was consolidating sideways. As we discussed, there was a huge symmetrical triangle formation for Tesla. So there was a lower high and a higher low. And then, of course, eventually gapped down on earnings after missing expectations on EPS, beat on revenue, which we'll take a look at in just a minute, and then pushing higher, getting rejected once again at 233, which we highlighted in our daily market updates. 233 being a very, very important level of resistance. Double top, got rejected again, and then sold off with the market all the way down to low 200s. And the next support really for Tesla is going to be down here inside this green rectangle, an area of demand sitting for Tesla in the 180s and 190s moving forward, with the resistance staying put at $208 per share, all the way up to as much as $233 for Tesla as well. It's starting to come down to some pretty oversold levels here. So RSI on the 4-hour chart down to 36. There's been some massive liquidation from an L3 banker oscillator standpoint, meaning that there's been a lot of whales, a lot of big banks that have been exiting their positions on Tesla, and the MACD also coming down to pretty oversold levels here. So a technical rebound is possible. not just for Tesla, but for the entire market. A technical rebound is possible going into next week, considering the markets are incredibly oversold. But then again, there's negative catalysts that are piling up over this weekend. We heard from NVIDIA delaying some of the production for their chips. Warren Buffett selling 50% of its Apple position. So there's definitely a lot of negative catalysts that are coming on top of each other, with some recession fears, which was again trending on Twitter with almost 63,000 posts on Twitter. So there's definitely going to be quite an interesting week that's coming up, with, of course, some problems happening over in Japan with the markets and interest rates as well. So technical rebound possibility, but macro fundamentals continue to look a little bit more on the weaker side. And then finally, if you come over to one more chart that I want to address and break down in this video, that's going to be this one right here, which also goes over some potential head and shoulders patterns. Now, there's a few different head and shoulders that people are seeing for Tesla. The first one I already showed you. That's the left shoulder ahead and a potential right shoulder that is forming, and then eventually could be a breakout from this neckline. So I really want you to comment down below what kind of technical analysis are you seeing for Tesla at the moment, right? What kind of analysis, what kind of prediction that you can really come up with for Tesla stock. And the second potential head and shoulders is a much longer one that I've also seen on many places. That's going to be this right here, with a potential left shoulder ahead and then a very weird looking right shoulder with a diagonal neckline, and then a potential breakout to the upside once it starts to recapture some of those levels in the 260s and 270s moving forward. So those right there are going to be a couple potential head and shoulders, inverse head and shoulders patterns for Tesla moving forward. But of course, both of them lead to a potential breakout to the upside north of 280, getting back up to almost $300. But on a more serious note, this right here is the actual technical breakdown, with the next support being in the 180s and 190s, and resistance staying put at 233 for Tesla. Now, coming back over to some of the comments, Elon Musk had an interview with Lex Fridman for the second time. I highly recommend you watch that interview. It's super long, super informative, and Elon Musk briefly mentioned that Tesla is going to be doing over $100 billion in revenue. The conversation was around time. This particular one, for context, was around how Elon Musk uses his time in terms of making decisions, and he also said that you have to allocate time in a way that you're getting the marginal benefit of making good decisions, because every decision he makes can result in changes in his businesses in terms of revenue, income, profitability, cash flows, in the tune of hundreds of millions of dollars, sometimes even billions of dollars that he's overseeing, right? So $100 billion for Tesla in an entire year. That's just over $2 billion for a week. So that is a lot of revenue that Tesla is driving for 2024. So that is that. This right here, I also broke down in my previous market update, but this was from a Twitter user that essentially accumulated all the Tesla's quarterly numbers, and this is the chart that we get, which of course is very, very beautiful looking chart, but this is also cumulative numbers. This is not quarter over quarter. This is just adding up everything, and so far Tesla's done over $350 billion in revenue if you combine all the cumulative numbers here, and to which Elon Musk essentially responded saying that long term it will be super nutty, right? Saying that super crazy long term, because Tesla's, according to Elon Musk's opinion, is only getting started, to which he's also affirmed Cathie Wood and ARK Invest analysis over the long term for Tesla, suggesting for well over multiple $1 trillion in value for Tesla when you account for autonomous driving, artificial intelligence, robotics, humanoid robots as well. This right here was just a few hours ago. And to which another Twitter user essentially said that if you own a Tesla, connect to the Wi-Fi, upload FSD version 12.5, then pick a destination and your car will take you to it. If you're on 12.5, you're basically playing the role of an old-fashioned elevator operator, to which Elon Musk said 12.5 is awesome, worth it. So again, boasting a little bit more about the FSD, full self-driving 12.5 version. And as we already know, that Tesla's moving more and more towards full autonomy, getting the vehicles to fully self-driving, and that's also going to unlock the huge market related to the robotaxis that Tesla has. This on a more fundamental side, Tesla gains as Morgan Stanley lists it as a top automotive stock pick. This is a little bit more dated, just came out a few days ago, but essentially the analyst is Adam Jonas, analyst at Morgan Stanley, who has covered the automotive sector for several years, is well aware of Tesla's prowess, holding a 310 target on a Tesla with an overweight rating. Jonas reiterated his consensus on the stock in a new note on Monday, called Tesla his favorite position in the automotive sector, and that is a top pick in the automotive sector, replacing Ford. And accompanying the note was this right here, this entire list, and they are overweight on all these companies, with Tesla at the number one spot, as you can see over here. With the market cap, $663 billion now after the sell-off, and the price target being at $310 with a 41% now upsides even higher because the price has come down since this report was released, and they're looking at a 2025 P multiple of just under 69, enterprise value to EBITDA of just under 40, and they've got a consensus view of 30% overweight, 40% equal weight, and replacing Ford as their top pick. Now, the cool thing that I want to mention here with electric vehicles, and just like with any other industry that is getting started, that it's got ripe for profitability and capital potential, is acquisition, is merger, is consolidation. Right now, we've got a lot of electric vehicle companies. I mean, China alone has so many, dozens of electric vehicle producers, not to mention the US, Europe, Asia. There's electric vehicle manufacturers coming up all over the place. But eventually what we are going to witness is that the market is large. It's very large. It's a 100 million vehicle market per year vehicle market. However, there's going to be consolidation in the industry. Car business is very, very challenging. It's very difficult to be profitable and have a solid balance sheet because it's a very capital intensive business model. And as a result, not every one of them is going to survive long term. And as there is going to be more and more consolidation, more mergers, more acquisitions, Tesla is at the forefront of this change, because not only are they one of the best, if not the best selling electric vehicle company in the world, they're also propped up with very good balance sheets, good profitability, and their numbers are some of the best in the industry. So speaking of numbers, if you come over to the actual analysis on a Tesla, and again, the quarterly numbers are updated. So if you come over to fundamentals, and let's just come over to the last 8 quarters, and let's plot for revenue. So we saw, of course, $25.5 billion in revenue. Plot for gross profit coming in at just over $4.5 billion as of the most recent quarter, and operating income coming in at $2.2 billion, accelerated a little bit from the previous quarter of $1.1 billion. In fact, over 100% increase on a quarter-over-quarter basis. And net income also went from $1.1 billion to over $1.47 billion for the company. If you come over to the balance sheet, I also mentioned that inventory levels were going to come down because the company is delivering more vehicles than it's producing. So inventory levels were expected to come down, as you can see, quarter over quarter, coming down from $16 billion down to $14.2 billion worth of inventory. So $1.9 billion of inventory was sold in the last quarter. And then again, if you come over to cash versus long-term debt for the company, we're sitting on well over $30 billion worth of cash as of the quarter ending in June, versus long-term debt and current portion of long-term debt sitting at just under $8 billion. So the company does have, again, a very strong balance sheet that it contains a lot of cash here. Hold rating, according to analysts, of course, we are very divided on Wall Street, with a high target of $325, low target of $23, and an average target of $204 a share, with the compounded annual growth rate expected somewhere between 11 and 12% over the next 5 to 7 years. But this may not be accounting for the potential that it has for autonomous driving, FSD, robotics, humanoid robots, energy solutions, a lot of different things, right? So revenue expected to grow by over 17 to 20%. And then finally, if you come over to our analyzer, again, so that's the whole idea. We've built this platform, right? You can access this with a link down below. You can join our Patreon. But the idea here is that you can plug in your own values, figure out with or without autonomous driving, FSD, robotaxis, humanoid robots, energies division, everything you can account for or not in this model, and then figure it out for yourself. What's the true intrinsic value for Tesla? So for example, if I assume a 20% growth rate over the next 5 years and give them a 30 times P multiple, account for, let's say, 1% share dilution, and if I hit calculate, I'm looking at Tesla being overvalued by just under 18%, with the fair value sitting at $170. But you can also take a look at the sensitivity grid and then figure out, okay, if Tesla's trading at $207 today, and this right here is $204, then a 36 times P multiple with the same 20% growth Tesla may already be trading at its intrinsic value, at its fair value. Or if you want to go a little bit higher on the growth rate, you believe that Tesla is going to be able to do 22, 24, 26% growth rate, you can again come over here and figure it out for yourself. See that in terms of the sensitivity grid and the matrix for Tesla and where that fair value might end up for the company. Price target 334 based on this analysis. But again, like I said, this may not be accounting appropriately what the potential would be for autonomous driving, robotaxis, humanoid robots. So hope you all enjoyed this video and a complete update on Tesla. Let me know your thoughts down in the comment section below. Going into next week, we've got a big support level sitting roughly in the 190s now. And resistance is going to stay up at $233 for Tesla moving forward. Still within the context of a downtrend, so still certainly weak from a technical analysis standpoint, but fundamentally continues to provide us with very good results. However, profitability is still under question considering the price cuts, the cost of operations, cost of goods sold continues to increase just a little bit. So the Tesla really needs to become a little bit more efficient moving forward if it were to increase those margins once again. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like and subscribe to the channel. Also do check out the Patreon link down below if you want to join, be a part of our MoneyVest community. And as always, happy investing. I'll see you all in the next video.